What's going on, guys? Doing an update, and I'm going to cover a few things in this video. We're going to do what we did today in the prop room. We went 4 for 5, I think, and yeah, 4 for 5, and talk about a little bit. This is the thing, guys, with our prop program. You're going to learn intraday. There's a dozen different lessons in today's trading. All of it you learn in real time, and it just becomes a part of you when you're in the game. You see it happen in real time. You know what it feels like emotionally. um, the nerves that go into it, the thinking beforehand, the doubting, or all that stuff. It plays out in real time, and that's the whole advantage of trading together. And you can see like my thought process beforehand, like, okay, we're going to sell some here, but we're going to be patient. Here's why. If we get above this level, that's where the risk is. We're got to think about flipping and then going the other way. And then that just helps you progress as a trader so much. You can't learn that in books. You can't learn that even in the coaching programs like I do. When we walk through stuff after the market's already closed, it's just completely different because when you've got risk on, it's just a different level of play. It's just like if you're in the Super Bowl playing the game, it's just different than running the tapes or working in the spring training. It's just different. So anyway, that's the value of that. But let me just talk about, and then I'm going to hit on a couple things I see big picture in markets also. That's pretty important. I did a bunch of work on gold today, and then I want to talk to you guys about our upcoming. There's a webinar Thursday we're going to do, and I'm going to go over more of these strategies. I'm going to talk about where I think the best opportunities into the next 3 months, 6 months are global macro, what positions, how to play a couple of these setups, and what to look for. I'll talk about that Thursday, and then we're going to talk about best way to get involved with us, memberships, and again, the prop program. Once you have questions, and I'll show you guys too where to get into the new Symphony room, because I have still a lot of you asking questions, which is fine. That's what this platform was I had up. There's a free chat room right here. I'll show you guys where to pop in there, and makes it easy. So today, we traded gold and silver for the most part, and the Nasdaq and the Russell. So I'll lay these charts side by side. Some of you guys were a little bit involved with silver before I was this morning, but we came in, failed at pi, and so we sold into this area, and then you had a secondary bounce we sold into, and then we actually ended up covering. And sometimes we want to be done trading before noon, so missed this last move. Maybe some of you guys trailed it out, which would have been smart. You could have just put in your trailing stop and walked away, or put in some profit takes, and maybe you would have got filled on those. But this was the first move into pi, and it was with the cycle, and then you get the drop. We covered, and then after you create that wall concept I teach, we shorted into that next bounce. There's a couple 1-minute cycles there, and then more importantly, the 5-minute that played out. All right, here's the 5-minute cycle, boom, and then the drop covered into the support. And in gold, it was very similar, except I was a little bit quicker to take gold because I was trying to be done on the day. But again, we fail here at pi, and covered into this move here, and that was it. You could have stuck with it and I guess kept trading. There's a point where you overtrade, and it's I like to get in the market every day and try to take money out. So if you're up pretty good in the morning, do you have to sit around and trade all day? You could try that. Sometimes you'll end up having a big day. Sometimes you'll give your whole morning back, and so then you're left with losses or just a break-even day, and you've had to trade all day long. Plus, you got commissions, so there's a trade-off between that. But there are some things you could have done here. You could have stayed with the 8. We even talked about 1448 was big this morning, that if we were to break that, you could get a flush. And then I put on Twitter, I think what the most interesting thing about today was not only did you fail at pi early, right here, but that 1448 level was pretty major. I mean, it was been the lows the last several days. We've had bottoming tails on the 30-minute chart. There's a lot of support here, 1450. Again, this was 1448. You went through it, ran the stops, turned around, big bullish engulfing down here, which formed the bottoming tail on like the 30-minute and the hourly. And then it's not like it just did that and rolled back over. It struggled to get above pi. You finally poked through the resistance of the morning and made a new high. So that's what they call an outside day. You make a new low and then you move to a new high. So that's actually, that could be a candidate for a significant low longer term on this bottoming tail. And I did a piece there on Twitter also. If you guys aren't following me there, it's at the Jason Jenkins. And I think my stock twits is the same, or it's just Jason Jenkins. But there's a couple things here on where they're going to hold this bottoming tail. All right, guys, with this low on the daily cycle. Now notice the RSI is not exactly below the oversold lines, but that's when you have a strong market, uptrend, bull market like you have in gold, longer term, you don't always get those below 30 levels on like a 9-day RSI or 14-day RSI. So this is a candidate here with the daily cycle in this bottoming tail. But you know, my traders know that when we break the bands, there's a lot of room to the 200, and this kind of creates a tough environment to get long in. We call this no man's land between here and the 200, and really between the 200 and pi. But notice here, pi is coming up to, it's going to come up through time towards 1375. And when you look at the weekly chart, we'll do that over here. The weekly chart is showing you, sorry, a little bit, obviously a higher time frame. A little bit, this is the scenario where you're going to see the 1400 level and the 200 and or a move back to pi, which it happens to be the breakout level of 1375-ish. So you've got this low here. That's where we broke out from. It comes right in line with kind of pi here, 1375. And then 1400 would be near the bands also. And that's kind of would be if this weekly cycle continues to head lower. And you can see the RSI is only back to 50. So here would be the higher low. I mean, last time we made a low in the RSI, it was a 50% retrace. Here to here, 50% retrace, boom, that was the low, rips, okay? So you are coming back to that same spot. So there's, again, that kind of furthers the idea that you're gonna hold here, all right? But this is what I mean on the weekly. Or is this gonna play out lower into the end of the year? That's a possibility, and then you come back and test 1400, 1375 into year end. So that's how I see it. Two scenarios today. You have a pretty high chance that maybe today was a low, and or, you know, there's lots of things that can play out. It's not really about scenario building. It's just like picking your spots in time and location to where you can work your risk. So we nibbled today, but I did buy puts, like back ratio put spreads at 1450. So that way, if we roll over, I can realize my puts and then buy more futures at a lower price. That brings my average down. It's a smarter way to kind of to nibble. I may even take off some futures if we take out today's low. There's one more thing I was going to say about that. Oh well. So anyway, I think that those are pretty two. I think those are some good signposts, guys. You can help manage your risk around the gold play. It's kind of the same thing in bonds. I won't hit on that too much. I want to hit on the NASDAQ and the Russell, what we did today. 10s didn't move that much. I mean, I didn't really look at them late in the day. I think the long end popped pretty good, actually, but 10s Tens made a new high. So tens we actually covered. Tens we covered into this initial. I sold up here. I sold at like 9 or 11, got my average, and then covered, basically scratched it, and then actually ended up going to 4. So could have made a little bit more money there. But that move came again closer to lunch, so I was already on a run at that point. This tens really came off late in the day. I don't know what that was about. Oh, that was long bond. Sorry, that was 30s. It's the same. It's the same chart though. Actually, this morning. Here we failed at pi. Okay, 7 was what I thought I saw the low was. We ended up scratching in here. Tens didn't move that much this morning. Okay, so the Russell. You guys can see this here. Let me just bring it up and kind of jog my memory also. So here, this is on our prop team. This is the Russell. So I'm gonna show you what I did here in the Russell, which is kind of a couple things. We did a good job of stopping on our initial kind of short hedge while we were long the NASDAQ on the other side here. So we were long NASDAQ and then we went short the Russell. All right, but when we went through, I'll show you on an easier chart to see, but when we went through the high of the morning, we stopped, took that risk off, so we didn't keep dragging that along while we're making money on the NASDAQ. And then once our 15-minute cycle peaked and we got a topping tail here, we sold a little bit. I sold a little bit before that, got out of all of our NASDAQ, like almost, I think we might have even sold the high. I'll have to look. And then I hit it. I drilled it on the 5-minute and then covered. And then resold a little bounce and covered and then called it a day there. That was the Russell. NASDAQ was basically the opposite of that, selling into the 15-minute cycle. So here's the NASDAQ. Sold pretty well, 82.90. That was the high of the day. It's 8,300, not bad. And then you can see this 15-minute cycle just boom. You cycled all the way back to pi on the 5-minute. So again, here's what the NASDAQ looked like. You can see how we were adding, taking, reducing. And so the setup there, guys, is just, this is how you should be reviewing your trades too, in your trading journal. And then, I mean, I'm 15 years doing this, reviewing trades every night, doing these videos. It's 5 o'clock. We're playing inside of this run, and it's this 15-minute. Sometimes it'll run into a 30-minute cycle too, or even an hourly, which is usually the really tough ones if you're caught short. That's why you want to try to stay with the trend as much as possible on the 5-minute and 1-minute. There was this pullback I missed. Thought maybe we had already turned. We missed this last one. There's a little bit more gains there. Actually, we didn't miss it. I added here instead of adding it. It was like 67 or 69 I was looking at. You remember that pullback? It was right. Jump around too much. Oh, a couple of you guys took this one. Scraped out a little bit. It was this one right here, or I could have added here, and I didn't actually add till right there, and then sold. Boom. And then that was the last move. And there was little scalps in here you could have had. I mean, it's all just how you. I mean, those are the scalp plays there on the long side. It's just different when you already have a nice 15-minute cycle. I don't really care to tend to trade through lunch. It's just low energy. Sometimes it's a lot of torture. And you got a full retrace the other way with this 30-minute cycle. It's pretty. I mean, that's what we're trying to take out, guys, in your day trade. All right. Those are the cycles that are in there. And then, so what it looked like on the Russell over here was this high right here mattered. And so we were playing a short first into this drop. Made money, all right? We were short coming in before the open because this was a downtrend. You had a nice drop, made money, and then it bounced, missed the first bounce, which is actually the better bounce. And then the secondary move up, we sold into, but our risk was above here. So if you just want to keep shorting something because it's going against you and you're out of the money, I mean, this would have been a horrible, you would have got ran over in that move. You got to know that there was risk there and there was risk above there. And then this was the topping tail. We ended up selling the high on with the 15-minute. Right? 15-minute cycle, boom. And then here's what that intraday early move looked like. Here's the drop, covered right here. Could have sold here. That would have been ideal. And then you had another secondary move. By the time you get the third leg up, this is a little bit more dangerous sometimes of 100% retrace. But again, once I saw that happening, it was like, all right, we're gonna take the long on the NASDAQ here, and then we're gonna get heavier on that. All right, that's how we do it. It's pretty good recap of today. Miss anything? That was silver. We talked about. I don't think you can see my first cover. Oh, so there was my first cover. 1594. Might have even covered a little bit lower, and then that was that secondary bounce I told you about, and then that was the troublesome third bounce. So 1594, pretty close to the low, guys. 1594. So covered the low and sold the high today. How's that for timing? You listen to the CNBCs though, and all old Wall Street that just wants you long all the time, and they'll tell you can never pick tops. So we covered almost the low, 1494, and I drilled the high up here. I sold into the absolute high of the day. It was above 1606. So that's what you guys learn here. That's part of the process. What you want to do is go to jenkinscm.com, Jenkins Capital Markets, jenkinscm.com, and then 3 things. If you don't have our ebook, I would grab that here. That's free. And then there's a couple other offers on the backside of that. Like I have our Pi Cycle trading course for $47. That's usually a $500 value. But this is where I talk about why the cycles work. It's about energy. It's about wave formation. It's about fractals. And then I even talk about big picture cycles. And then this is our next webinar. Click there. That'll get you signed up for Thursday, registered, and then our free chat room. And when you guys click the chat room, this is through Symphony, which is one of the more security-focused firms, kind of similar to a Bloomberg, but they service all the big banks. So you can't just directly opt in. I have to invite you, or you have to sign up first. It's free, and then look for the room. And then from there, sometimes I do have to invite you in. So just message me. It's another reason to follow me on Twitter or but that's why I wanted to get you guys in the chat room here. So that's the best way to communicate with me. And again, that looks like you want to search this right here, JRM, JRM free chat room. All right, guys, enjoy the rest of your evening, and hopefully see some of you guys in the webinar Thursday.